Consolidated financial statements are financial statements of an entity with multiple divisions or subsidiaries. Consolidated financial statements are strictly defined as statements collectively aggregating a parent company and subsidiaries. GAAP and IFRS include provisions that help to create the framework for consolidated subsidiary financial statement reporting. If a company doesn't choose to use consolidated subsidiary financial statement reporting, it may account for its subsidiary ownership using the cost method or the equity method. In general, the consolidation of financial statements requires a company to integrate and combine all of its financial accounting functions together in order to create consolidated financial statements that shows results in standard balance sheet, income statement, and cash flow statement reporting. The criteria for filing a consolidating financial statement with subsidiaries is primarily based on the amount of ownership the parent company has in the subsidiary. Generally, 50% or more ownership in another company usually defines it as a subsidiary and gives the parent company the opportunity to include the subsidiary in a consolidated financial statement. In some cases, less than 50% ownership may be allowed if the parent company shows that the subsidiary's management is heavily aligned with the decision-making process of the parent company. When less than 100% is bought but control is achieved, we recognize control by adding 100% of all assets and liabilities and show the non-controlling interest in equity. As net income is generated by investee, we include 100 of revenue and costs in the consolidated income statement and allocate non-controlling interest as a percentage of net income at the bottom of the income statement. As dividends are paid by the investee, non-controlling interest as a percentage of dividend paid is shown, and outflow of cash in financing cash flow is shown as well. In the shareholders' equity, we can see that it goes up by non-controlling interest as a percentage of retained earnings of subsidiary, and beginning amount plus non-controlling interest as a percentage of net income minus non-controlling interest as a percentage of dividend paid would be the ending amount here. We will take a closer look at income statement and balance sheet consolidation in the following videos.